Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and got a lot of stuff to cover today, and I got a lot to do after I cover it. So let's get this thing going. I wanted to start by reminding everybody, Clinton Donnelly is at Crypto Tax Fixer, and his website is cryptotaxaudit.com, which will be in the top of this description because he is a sponsor. But on his website, when you go to it right now, it's first thing you see is, have you received an IRS CP2501 cryptocurrency letter? They've started sending these out, and the letter informs you that that the information reported to the IRS by others doesn't match the information you reported on your tax return. So Clinton Donnelly and his firm can help you with this type of thing because they specialize in crypto tax related issues. So go click on the link in the top of the description and go check him out. All right, I put out what I call my adult/utility crypto list, and I think it's a pretty darn good list. And pretty much everything you see here, these are the digital assets that I've studied that I think are going to have real utility, because I think all this stuff goes away. Remember, Brad Garlinghouse said that there's going to be, we'll end up with scores, which is 20 plus, a score, I think it's around 20 plus. So, and I kind of agree with that. But I think based on, like, just as a, for instance, part of what puts some of these on my list is, remember that World Economic Forum list that was going around a little while ago? That list included, as I recall, XRP, I can't remember if XLM was on it, but I know that Algorand was on it, CeeLo was on it, IOTA, I think IOTA may have been on it, and Sol. Then also what's going around is about being ISO 222 compliant. There's like 4 of these, but everyone on this list is actually working on real utility, not just, hey, this is a store of value because we can't do anything else. These are real projects backed by real money and with real people running these things. Now, moving along, Hassan Al-Anazi says, I expect that the settlement of the Ripple case will be announced in the coming weeks. Man, I don't know if he's right. I hope he's right. But this kind of goes in line with an article I'm going to show you here in a minute about Gary Gensler. But boy, if he's right, well, look at this. Dark Defender is thinking that we are that actually he says it right here. In fact, he's got a website, and I cover his tweets, so I'll at least tell you what his website is. It's defenddark.net. He's created this website where he gives his analysis. Will XRP hit 66 cents in 2 weeks? Well, if Hassan Al-Anazi is correct, then all bets are off. All bets are off, and the chart will be blown to smithereens, because 66 cents would be, if this case ended favorably, 66 cents would be peanuts, because you would see XRP go to where it should have been a long time ago, which is way past Ethereum and Bitcoin, because it actually works. Okay. James Rule put this out. Ripple has opened a 6,000 square foot or has just taken out a lease for a 6,000 square foot place in Miami. Now, I don't know this for a fact, but what I can tell you is a couple of things on this. It wouldn't surprise me if Brad Garlinghouse either has a place or intends to move to Miami. And the reason I say that, I remember him doing he did a Zoom video not too long ago. He was doing an interview, and I remember him being in something that looked it looked like a condo in Miami to me. And I don't know if this guy has a place there or not. I do know that his best friend is Michael Arrington, and Michael Arrington moved there. and a lot of the crypto people are moving out there. So you have to wonder if Brad Garlinghouse either has or is going to be locating himself to Miami. That wouldn't surprise me at all. That's sure a nice building they're putting together. Okay, I wanted to just cover this because the whole world's falling apart. The European Union is again close to meltdown. Folks, what we're in right now, because nobody did the responsible thing after the financial crisis, what we're in right now is we're in a 10 times worse situation, maybe 100 times worse. Because instead of doing the responsible thing and letting people fail, letting everything burn to the ground in the financial crisis, these people bailed their buddies out, and then they propped it all up with the freaking Fed printing money for the next 10 or 15 years. And here we sit in a worse situation than we were in because these people who are supposedly the smartest people in the room did the stupid thing instead of the responsible thing that you would do. So here we are. So yeah, meltdown wouldn't surprise me. Jeremy Hogan tweeted this out. This is an article about Gary Gensler. Gensler appeals for one rule book in negotiations with the CFTC over crypto. So here's this guy. He's tried to bully the entire industry all this time, and he must realize he's about to have his butt handed to him. And now, so Jeremy Hogan says it here, Chair Gensler feels his agency's grasp on power will be weakened with legislation or maybe a Ripple loss. So he's trying to broker a deal with the CFTC before that happens. Well, in my part of the world, we call this a coward move. He tries to bully everybody in this industry, and then he sees that he might have his butt handed to him, and now he's going to go and try to, oh yeah, let's work out a deal. Where was this guy wanting to work out deals when he had all the power? Somebody needs to take it from him. Another picture of Brad Garlinghouse from the Ripple event in Toronto. Just wanted to show you that. Then we've got this. Scoop. Goldman Sachs is looking to raise $2 billion from crypto funds, vulture investors, and other financial institutions to buy up Celsius Network assets in the event of bankruptcy. I've told you for years, no matter what these people said, no matter what kind of stories they planted in the media, I told you that Wall Street, not some of it, all of Wall Street's coming into this space. But how do they play the game? They buy when there's blood in the streets. And if I was a betting man, Wall Street is behind this recent dip. And they did it because they're ready to come in. You mark my words, you're going to see Goldman and Morgan Stanley and all these people, they're going to raise their hand right in the middle of all this bloodshed. They're going to say, hey, we've now got our custody ready. Now you can trust us, not these scary crypto startups. See what they did to you? Doesn't it work perfectly? And wasn't Gary the perfect man for the job? He really was. Remember, Gary was with Goldman Sachs for 18 years. Engineered demolition. Wall Street showing up to save everyone. You can trust us, not these crypto startups. They'll start announcing custody and being open for business any day now. They're patting Gary Gensler on the head as we speak. Here's another tweet. Seriously, nothing signals crypto is here to stay more than Goldman getting in by buying one of the shadiest crypto lending platforms in the industry. See how this works? This was Goldman Sachs on August 6th of 2018. I remember covering it in a video and telling you these people are lying. They're just saying this stuff because they're buying. And I think back then they were buying. I think they were buying over the counter so it wouldn't be reflected in the markets. Check this out. I didn't know that Tim Draper was a former crypto billionaire. This is news to me. But he insists that Bitcoin will soar to $250,000 within 18 months, the next 18 months. That's pretty interesting. I like the sound of that. Now, this clip is from a congressman, and he's grilling the SEC after the Bernie Madoff scandal erupts. And I want you to watch it, then I'm going to make a point.
What the heck went on? mission, you said, was to protect investors and detect fraud quickly.
So did Gary.
How'd that work out? What went wrong? One guy with a few friends and helpers discovered this thing nearly a decade ago, led you to this pile of dung that is Bernie Madoff, and stuck your nose in it, and you couldn't figure it out.
Oh, they
You
can
have
figure it out.
single-handedly diffused the American public of any sense of confidence in our financial markets. If you are the watchdog, you have totally and thoroughly failed in your mission. Don't you get?
Well, this time it's worse, folks, because we have put Gary Gensler and Congress's nose in the Ethereum dung, and they've done nothing. Okay, so Congress can't sit there and grill these guys, not with any honesty, not that honesty matters to Congress, but they can't grill the SEC on this thing unless they start calling for investigations now. They're not in a position to grill anybody on anything, folks. So I copied all of them in on it and say, look, we've been sticking your nose in the dung for over a year now, the Ethereum pile of dung. So we're not going to let them forget this. They can either step to the plate and grow a set now, or later on we're going to be rubbing that in their face that they didn't do anything. Now, speaking of rubbing things in faces, this is Gavin Wood, and he was at the collision event in Toronto where Brad Garlinghouse was. And here he's talking about how he's the one that coined the term Web3, by the way, back in 2014, according to him, which is interesting that all these venture capital firms have carried that marketing term as well. But it's not interesting. I mean, it's obvious when you know that they were there back in 2014 with him, which we know because of video and their own words. But he's talking about how Web3 is all about transparency. And then I hooked on a clip of him in 2014 where a guy's asking him what kind of money was made on this Ethereum ICO. And he doesn't seem to want to be too transparent in that. Listen to this.
You don't have any right to go to Facebook and have your auditor audit their systems. That is not a right that you get by using Facebook services, right? Maybe at a push, your government might possibly be able to have some kind of right for that, but then you can't audit your government that they're actually acting in your.
See, this is the whole argument by these Web3 guys and all the Andreessen and Horowitz guys like Chris Dixon. They say the same thing. What they basically did is they went to the SEC and they said, you see, Facebook, Twitter, and all these things, these are centralized. These are bad. But what we're trying to create is this Web3 thing with Ethereum that's going to be decentralized, and so it's not bad. It's not going to be centrally controlled. But the part we're going to leave out is who the disguised whales were in that ICO, because who controls that Ethereum? That would be the exact same. That would be no different than what they're complaining about Facebook and Twitter, which is why they don't want anybody to know who those disguised whales were, because the whole thing is a lie. And that is the problem that I have. I want Ethereum to do well. I want Bitcoin to do well. I want XRP to do well. But these guys intentionally tried to engineer something that was not a level playing field. And they tried to disguise it as being decentralized when the ownership was the ownership. They don't want you to see who the big buyers were and who had multiple identities in that ICO. They disguised it for a reason. It's disguised to this day. There's a reason Joseph Lubin will not tell you what Consensus owns. And the same guy has the gall to point at Ripple and say, well, you own most of that, don't you? And aren't you selling it? And then Brad Garlinghouse told him, well, how much are you selling? Oh, well, I can't talk about that. I mean, this is crazy. It's all crazy. It doesn't make any sense. Listen to the rest of this video.
Interests behind the scenes either. So Web3 is designed with this level of openness and transparency fundamentally being a part of it, so you can audit it. Now maybe you don't always want to audit it. Maybe you're lazy and you choose not to audit it. But the point is that you can. And this is a crucial difference, because when push comes to shove, you at least have the option.
You know, that's very sad. Did you make a lot of money on it?
Not as much as some others.
Not as much as some others. Okay. Would you like to explain that?
There are many.
Something went the other.
Remember, it's Web3 is all about transparency. I want you to tell me if what he's telling you right here is transparent. He seems to be hiding an awful lot.
I suppose it was.
Look how he's choosing those words very carefully, just like Joseph Lubin does.
In some sense, it didn't take the route of what you would normally expect a technological venture to take. The route was.
How come Mr. Transparency here, Web3 transparency? Why would he not say, okay, well here's what happened, because this whole it's all about transparency. Joseph Lubin got this many, Andreessen Horowitz got this many, or whoever was. I'm not saying Andreessen Horowitz did. I'm just saying this company got this many, this guy got this much, this got it, and he used X number of email addresses to hide his identity. Why are they not coming out and being transparent like that? Because Web3 is all about transparency. That's why you can trust it, right? Wrong.
Was done in a much more inclusive environment, where the people, normally in a technological venture, there's maybe 2 or 3 people that take, in some sense, the lion's share, subtracting from later employees and, of course, equity sales. But generally, there's 2 or 3 people, and that really wasn't the case with Ethereum. With Ethereum, it was always meant to be a very inclusive system, both in terms of how any of the sort of potential tokens were shared out, and of course in the sense of who's allowed to help build it, and who could develop on it. How we can bring as many other projects in to help make this a success.
So some people took more money out of it than you did. Are you disappointed in those people?
For me, it was always about getting this project out into the open and seeing it used.
All right. And then finally, we want to finish here. Flare has made their announcement finally. I'm still a little confused on when they're launching, and I'm hoping somebody will clear it up. What they say here is that, here it says, with this milestone, Flare's mainnet genesis will occur on or shortly after July 11th. Subsequent to final audit, the token distribution smart contract code taking place the week of July 4th. So this says the mainnet genesis will occur on or shortly after July 11th. But then it says that it'll go in observation mode. Observation mode will last for a minimum of 8 weeks. So, and then it goes down here. It says upon exiting observation mode, the initial token distribution 15% will take place. So the way I read this is that 8 weeks after July 11th, which would put you somewhere into September, is when they're going to distribute Flare. That's the way I read it. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, and tell your friends and family that it looks like Flare is going to be in September, but don't quote me. I think that's the way I read it. Thanks for listening.